Hi, this is Ben Webster with the Scaling Alpha podcast. Welcome to our fourth episode. Today, I'm joined by Carter Burns, co-founder and chief investment officer at Shaw Circle, a quantitative investment firm focused on derivative strategies and dynamic volatility capture, which he co-founded while studying finance at the University of South Carolina. Shaw Circle has since become the first recipient of the South Carolina's Quantum Computing Grant for financial applications and was named the nation's first quantum fellows through the Georgia Tech. Carter, over to you. Could you take us through your background and how Shaw Circle came about?
Yeah, absolutely. And thanks for having me today, Ben. Um, so Shaw Circle was born in a time of a lot of excitement in the world. Jordan Fowler, my co-founder, he had an upbringing where he decided he wanted to take some of his destiny in his own hands, and a lot of his interests came from fundamental analysis of companies. And I had a mentor that was a trader of commodity derivatives on Wall Street for about 15 years. And we ended up meeting at the University of South Carolina in a program called the Carolina Finance Scholars. So essentially what it was is a Wall Street investment banking pipeline program. And
Okay.
Jordan and I, 95% of the students go off to Wall Street and work at Evercore, Lazard, all the great investment banks. And Jordan and I decided to do our own thing. And so, Jordan had already raised, when I met him, about $500,000 for a friends and family fund, which was all around how do we look at the markets and create better risk return profiles utilizing option contracts, because there's a nature of option contracts where you're agreeing to something right away. It's
Yep.
not just buying the stock and looking around at where it might go. And I think the nature for options, the way Jordan and I's brain works, were really intriguing because you got to control a little bit of your own outcome because you sign up for it in the beginning, right? And so we ran a friends and family pilot fund from 2022 to 2024, outperforming in every single year. Our flagship year was definitely in 2022. Had positive performance in a deeply down year. That was our Russia-Ukraine war. But at the end of that in 24, we got approached by the state of South Carolina, who was trying to push quantum computing to the state to accelerate technology adoption. And they were looking for a group to try and take quantum technologies and apply them to your business for commercial applications. And so it took us up to MIT. We did a quantum hackathon where we placed at our first hackathon ever at MIT, among some of the smartest people from 106 different countries around the world. And really what this exposed us to was, as discretionary managers, what is possible out there with the world of technology. The crux of what quantum was for us, and what really quant finance was for us at this time as we were making our pivot, was how much more can we do, right? How much more information can we take in every single decision we're making? And we looked at the technology ecosystem between both what was happening in high performance and AI, how everyone was treating AI, and then the quantum world, and said, this is absolutely where things are going. And so, after getting a lot of institutional investor confidence behind us with those projects in those early years in the strategy, we actually decided to make the difficult decision to return capital to investors and then go ahead and spin up our fully quantitative and systematic infrastructure and strategy. And so we've built that over the past 18 months, and we're really excited to bring it to the world.
That's fantastic. No, thanks for that background. So for our viewers, obviously, Shaw Circle, they're quantitative investors, but they won the fellowship for quantum computing, right? So just to make that clarification for our viewers, and we'll get into a little bit more about the quantum computing later, which is fascinating, and about the kind of the potential applications for finance. But in this journey, one of the big things a couple of things I heard was that you decide to take your own path, not the traditional investment banking path of your contemporaries on that they took in the track that you were on. Jordan, he wanted to take his destiny in his own hands. Sounds like he convinced you to do that as well.
He's a
And,
good salesman.
and so very early, you had the opportunity to run some money, right? Real money in the real world. And what did that teach you? What did that teach you compared to the path you think the path you could have gone on?
There's one thing I'll say about this straight off the rip. There's no shortcuts in the world, no matter how you try and get to it. So
Yep.
could we have gotten the same level of experience we got ourselves somewhere else? In a lot of ways, yes. But we actually got to learn from the ground up by teaching ourselves. So I don't think we were able to shortcut anything. But what we were able to do is we were able to learn. And what running money early taught us was it really humbles you very early, because some of the smartest people in the world globally are competing against you every single day, and they want it every morning, right?
Hmm.
People take this as a craft, as an art, as a sport, the investing world and the trading world. And so it's competitive, right? And so you've got to learn how to harden your own view of how you are going to manage money against massive competition. And you have to be incredibly emotionally tolerant. You have to have incredible risk frameworks, very grounded strategies. Otherwise, the chaos of the markets will beat you. And so the early years were very fundamental for us to learn all of the complexities of how these markets really work. There is 1,000 layers behind the price that you see on the screen.
Hmm.
And I think it really taught us the depth and the competition we were going up against, and taught us how organized and how innovative we were gonna have to be to truly win at scale. And that did nothing but motivate us coming into this new chapter.
Well, you had to have a lot of conviction to go do that,
You know,
or was it false conviction that became real conviction as you tried and tested and learned? What was
So
it?
so in our pitch deck, we actually our first or second slide, we have a lot of quotes on our slides. We have a quote wall in the office. It's something to keep you going, right? This business is no different than any other early stage business. You're working really hard for not a lot in the early days because you believe in yourself and your team and your mission, right? And you know you have good people around you. So one of the quotes we have on the wall that translated into our strategy deck is, impulsiveness gets you in the room, obsession keeps you there. And so
Hmm.
I think there were a few impulsive decisions that led us to bet on ourselves early, but it's the obsession that keeps you there every single day, talking to the smartest people in the world, having the humility to learn from them, innovating on your own, building, and just you've got to be obsessed to win in this game. And so,
That's that.
I think, I don't know, false conviction, maybe just early conviction in a version of ourselves we hadn't proved yet, and we work every day to prove it.
Yep. That makes perfect sense. Well, you in that first fund, right? You were managing money. You had some great returns, but you chose to close that fund.
Hmm.
Tell us about what went into that decision. Why did you close it, and what gave you the conviction to do that and move on to what you're doing now?
Yeah. So there's a couple pieces here, right? The conviction to close it was about what was on the other side of the opportunity. And so, back half of 24, as AI was really advancing and we got access to some of the smartest minds in the world in quantum. And quantum's interesting because the top of every field, when they still have extra bandwidth, they explore the next emerging technology, which is quantum. So the people
Hmm.
at the front of AI explore quantum. The people at the front of hardware explore quantum. The people at the front of their own industry explore quantum, right? Because it's the next thing that's not proven, but if you're at the top, it's the frontier. And so getting exposed to those types of people was a very concrete shift in our brains of where the world was going. And so
Hmm.
we were originally running a human managed, a discretionary investment book. So Jordan and I had risk frameworks and we made the decisions. We looked at the signals, we looked at the positioning, we looked at the market information, we sized the trades.
Hmm.
It and ultimately, the human brain is not able to take into account every piece of data required to make the optimal investment decision. And so it became acutely clear to us that while we were doing well, we were almost doing ourselves and our investors a disservice not building out the data and the strategy architecture required to capitalize on every opportunity that we could for our investors. And so it was both the realization of the opportunity that existed and the excitement of where the world was going that made it a next to no brainer for us to put our heads down and build the next great thing that could scale ultimately to a very large competitive institutional fund.
You built from the ground up yourself. Were there no third-party technologies that I'm assuming that you couldn't find something that fit your needs? And if my assumption is true, what were the things that you needed that those other technologies couldn't provide?
Yeah, Ben. I mean, there's the core pillars of anything, right? There's a
Yeah.
good data layer, there's a reasoning layer, and then there's sort of an execution layer. And then on top of that, you can sort of have like a viewing layer, right?
Hmm.
And so there's different providers at each layer, but ultimately the first thing we needed to do was run simulation strategies using options because that is what we know the best. And it's where we thought there was the most opportunity because we didn't think the market was ready to run a strategy like this, but we thought we had the know-how to put it together. And so we went to the market and we said, are there options backtesting strategies? Yeah, there's a few, maybe just on the SPOOs, on the SPX. Maybe there's a couple on NASDAQ. Maybe there's a few here and there, but nothing that you can have your own customized regimes, customized risk parameters, customize everything. Like it didn't
Like you
exist. Not that
would for a normal share of stock.
exactly, right? Because
There's a lot of financial technologies that have been built to do that type of back testing robustly, but not
exactly.
for options. Interesting.
No. So like a
Yeah.
single stock, take like Apple, right?
Hmm.
Apple, the data point is one price per time step, right? When you look at the options market, there's probably 30 to 40 different expirations. So let's say 30 expirations, 100 different strikes each. You're now at
Yep.
3,000 instruments per ticker, right?
Yep.
Per name that you're looking at.
Yep. Yep.
And there's
Yep.
information on every single one of those instruments for you to use inside of your own investment strategy. And we had to find something that existed that could give us all that information, allow us to use it the way we wanted to. It didn't exist. So we had to go right to the source. We had to go right to the source of the raw market data, construct our own Griggs framework, construct our own risk and simulation framework, strategy, signals, execution, risk management, everything from the ground up. And then we needed to connect it into the market with a broker directly. And so at
Got
each
it.
step, we looked for a existing solution to buy. But also when you're running a lean business, the build versus buy decision, especially in the age of AI that we built in, it was really hard to favor buy when the thing you wanted
Yep.
just always had something that
What?
wasn't perfect about it. And you knew if you
Yeah.
just took an extra month, you could build it. And we were bootstrapped
Yep.
anyway from the ground up. So we were willing to take the time and the effort and the attention to detail necessary to build the thing that we knew our investors wanted and that the market wanted.
That makes perfect sense. How did you pitch this to your investors that you were managing money for? Like, hey, we're making this change. We're shutting down the fund. We'd like you to ride with us. Will you do it? Will you be here when we come back? How those conversations go?
Yeah. Ultimately, the people that bet on us early were a lot of good friends. And I think that in your early days, delivering more capital back than you took away from them was a big smile on everybody's face because they wanted to do it out of both excitement for what you were doing,
Hmm.
but also like because they wanted to make a return, right? And when your people do well, I think they trust that your next decision is going to be also correct if you drive a track record of making good decisions. And
Yep.
so ultimately, it was incredibly well received, and we will have. I'd like to say we'd have everybody joining us in the next chapter that we had from the last.
That makes perfect sense. So, obviously I have a little better understanding now that you take an option, there could be multiple thousand different options, different strike prices, different expiration dates for that ticker. Tell me a little bit about how you built your architecture to account for that, because I'm assuming you're looking at
Yep.
potentially hundreds of companies.
Yeah.
What did you have to do to make this work? What did you have to do to make to systematize it and make it and actually trade it that you couldn't get anywhere else?
Gosh, I met the right guy to join our team that tackled all of the back end infrastructure. I mean, Brian Henry
Hmm.
is an absolute killer. Like he really architected our system from the ground up. And so Jordan and I, while we knew what the strategy and the inputs and outputs needed to be,
Hmm.
he decided to learn from the ground up. He was originally our COO, but as a fund of four, right, everybody's got to wear a few hats. And he decided to take on the cloud infrastructure architect role. And he has done an incredible job. On our first version, we were running at almost 100 seconds per day. We're now down to 60 milliseconds per time step iteration in our entire
Wow.
system. And it's
Wow.
it's honestly what it was willingness to learn at every single step. It was a big data build. It was a big database build.
Hmm.
There was a lot of trial and error put together to get to the right framework, but ultimately you knew what you were going for. And with
Hmm.
knowledge as open source as it is now, it's out there for you to learn, right? And if you're willing
Yep.
to take the time, spend the 15 hours a day and learn it and build it and iterate on it, know what you
Yep.
like, know what you don't like, and you can get there. I mean, that said, though, like you asked sort of how we use that information, that's sort of driving from the data layer into like sort of a strategy layer.
Yep.
And the reason the options are really important for us is a couple of things, but the main one is for signal and productivity. What we're looking for ultimately is in an investment strategy is where can you find the paths of least resistance that other people don't necessarily know about. And so price is the first layer, right? That's got everything, there's a lot of information already in that existing price. So you've got to go or upstream a little bit from price to understand where you may have edge. One
Yep.
of the things we really like to look at is positioning information. There's a few different types of positioning information, but one of them is in the options world, and it's sort of dealer positioning. So where are clients long? Where are clients short? Who's speculating? What are they willing to pay for different timelines? Because ultimately, what you're looking for is there information not currently in the price somewhere
Hmm.
else that you can use
Yep.
to better inform where price is going? And I hate to say it, but people know things that are non-public. And when people know things that are
Yep.
non-public, they put their money there, right?
Yep.
And if you can track that money, you don't know why it's there, but you know what how people are speculating. And more often than not, there's information in that. And so I'll give you a great example. Ahead of the attacks in 2002 or 2022 in October. October 7th was a big day in the world and a big day in the markets, right?
Yep.
And October 4th, there was some really interesting abnormal activity on some of the larger defense names. So Raytheon, Lockheed, General Dynamics, a few of those guys. You don't know what's coming next week. You don't know how the market's going to react to it. But in real time, you can pick up extreme anomalies that might have future price information in them. And so I'm not rooting for trading around events in the world like that. It's just an easy example.
Yep.
But that's one
Understood.
of the things that we look to track in terms of positioning to better inform the risk we outlay into the markets to achieve a return.
That makes sense. That makes sense. And it's all about information, right? And getting
Yeah,
access to that information. And assume you're now that your strategy is not discretionary. It's more of a I mean, it is discretionary from a structure standpoint. You can invest what you
exactly.
choose to invest in, but
Yep.
it's systematic, right? And
Yep.
so I think of it almost as an insight pipeline, right? Where you take
Exactly.
the information and then you push it through the pipeline to generate that insight. So obviously you were talking about, you know, there are actors in the world that do have non-public information, and being able to detect that there are positions being put into place based on that non-public information is like the first step. I'm not saying that's your only strategy, but let's say that's one of your strategies to identify potential alpha, right? Having that information, getting that information is key. I'm not going to ask you how you get that because that's probably an edge of yours, but then being able to quickly and systematically identify if there's a real opportunity behind it, right? And
Exactly.
so it sounds to me like you've created your whole technology stack around identifying you probably have different alpha strategies or, situations that you think where alpha can be found. And you've probably created some sort of systematic pipeline to then generate, hey, this is a potential trade. Is there any discretion once it gets to that point where, hey, this is a good trade, or is it completely systematic from the perspective of you're following what the pipeline says?
So we follow what the pipeline says because, humans have emotion, right? If you're up a
Yep.
lot, you may want to be conservative. If you're down a lot, you may want to be conservative, right? If a
Yep.
series of events happen, your biases impact the accuracy of your predictions. And so we are discretionary when it comes to upgrading the strategy, adding new information sources, adding a new way we may adapt risk under certain scenarios. But what we want to happen in our strategy is that when those new exciting or scary or boring scenarios come up, the system knows how to handle those every step of the way. So we're not out here buying puts late. We want to benefit off of the human bias to buy when people are fearful already, right? Because that elevates vol. We can play that intelligently. And when we're emotional, that's not going to help. Every trader in the world can say the best thing you can do is level your emotions. In my opinion, it's easier said than done. And there's no better way to level the playing field of emotion than by taking yourself completely out of it when that big day happens, right?
Yep.
You already thought in advance from a structural and a non-emotional perspective what you would do in that scenario given all of the data
Yep.
and all of the simulation and all of the performance numbers that you would just ask the system to act how you would in your best mindset, and it does
That
that.
that That makes sense. So we're touching on a lot of various aspects of how you identify opportunity and how your custom built software enables you to do that. But let's kind of bring it home, right? With kind of your experience and your
Hmm.
partner's experience, how you look at the world, and how the technology you built from the ground up comes together to
Yeah.
create your edge versus other option hedge fund option strategies. So tell me, kind of simply put, kind of bring that all together. What is your edge? What is different? How do you compete effectively against or other funds in the market trying to capture the same type of stuff from options?
I think, we look at similar things, right? We look at positioning, we look at volatility information, we forecast it. We looked at trend
Hmm.
and price information, we forecast it, right? Trend following is common, volatility forecasting is common. Positioning
Yep.
information is largely out there. You create signals off of all of these pieces of raw information, right?
Yep.
I think our unique edge is being able to keep that information high dimensionality and being able to basically take the raw information, get it into the problem formation, and extract the most value out of it. So I think the our edge ultimately is in risk orchestration. I think
Okay.
being able to put all those things together and create decisions out of it is where our edge lies. And it's where a lot of managers' edge lies, right? Because in a game where information is abundant, how do you think about the world differently? How
Hmm.
many how many steps on the chessboard out can you think? And you can either do that yourself or you can have a system do that. And so the more steps we can think out with the more information we remember back, the better decisions we can make. And so
And the more
ultimately
you could synthesize the better you can synthesize that information as well,
exactly.
right?
Exactly, yes. And so,
And so, go on. Sorry.
a lot of edge lies once you've got the science down in the art.
And you built your technology from the ground up to do that well, to synthesize the way you want things to be synthesized, to act with the speed you need to take advantage of it. I know this well from working with a lot of hedge fund guys. I used to raise money for hedge funds, but in the last number of years, the ability to actually build custom technology stacks that, how do I say it? If everyone's using the same technology stack and they're all suffering from, and those technology stacks have the same flaws, like just think about from like just from trading execution, right?
Yeah.
Yeah, if everyone's using the same algorithm to do their trades, there's an immediate arbitrage opportunity that is
Yep.
available to everyone else if they know this, right? So I'm assuming you've built your technology to take advantage of the fact that other managers that compete with you may be exposed to the blind spots of those other technologies, of the broad market technologies.
Exactly, exactly, exactly. Yep, and we'll have to keep innovating, right? Because someday somebody will build something similar, right? And you better be
Yep.
3 or 4 steps ahead,
Yep.
right?
Well, it sounds that that's in the Shaw Circle's DNA, to go your own path, to build, to have conviction in your ability to do something better than the rest of the market. I mean, I think that's hopefully everyone who starts their own fund has that conviction, but like you said, proving it every day is your job, right?
Yeah, exactly, every single day.
So, your core framework centers on dynamic volatility capture, utilizing options as the instrument. Tell me, from an institution allocator or a family office allocator or other allocator that's a good fit for you, like how does this strategy fundamentally fit into kind of an asset allocation mix?
Yeah, so just like a gentle caveat here, the core strategy isn't around dynamic volatility capture anymore, that's a piece of it,
Okay,
right?
got it. Okay,
It's a piece of it now. A lot of it's around dynamic risk and dynamic opportunities, right? And so
got
volatility
it.
is one, right? It's
Yep,
not the only source of performance for us.
got it.
For institutional allocators, really what we've built is we came after the hedge equity sleeve originally
Hmm.
because it was a core equity concentration fixed all of the time with a collar on top. And
Hmm.
so what you're giving up is upside and what you're protecting is downside. But
Hmm.
you're doing that at a fixed ratio.
Yep.
There's no asymmetry in that equation. You're blanketing the risk you to achieve on the top and achieve on the bottom, right? And people think of risk only as a bad thing, right? A
Yep.
lot of times there's a risk, depending on how you think about it, to the upside,
Yep.
right? And so when people think about cutting off risk, a lot of times they're cutting off their downside, but they're by doing that in these vehicles, you're also cutting
Yep.
off your upside,
Yep.
right? And so we originally designed our vehicle to have that same drawdown mitigation while enhancing that upside capture significantly. And so the strategy is going to be targeting 2x of the benchmark by achieving half of the maximum drawdown of that. And
Yep.
we really achieve that by, or target to achieve that by taking this positioning, trend, and volatility information, informing it at the top layer, like the portfolio manager layer, to set our regime risk. So right now, today, Ben, how much directional and volatility risk should we have on based on all the information we have? We then feed that down to a system that finds the best opportunities across different industries and then different single names and underweights and overweights those opportunities. And ultimately, we express those predictions on trend vol and positioning via a series of layered option positions, which allows us to understand our risk really well. And
Hmm.
so hopefully we have outperformance at every single level. What ultimately that allows us to do is hopefully cut off those downsides, those deep drawdowns, and allow
Yep.
us to comp capital asymmetrically at a higher rate when it's an opportune regime to do so. And
Yep.
so our strat willing to put on risk at size when it's a good time to do so. And it also scales back risk when there's not edge in the market, when there's a lot of correlation, when there's not an opportunity for an investor to take information and find decision. We won't try and force capital into the markets, right? And so that
Yep.
allows us in these deeper drawdown periods, ideally, to cut off that deep tail risk and opportunistically size up when it's time to have that risk to the upside.
That makes a lot of sense. You, in a previous conversation when we were preparing for the pod, you mentioned that there are other kind of related strategies that you can expand into. I'm assuming it would those would all be in options, or could maybe there's strategies in equity you're exploring. Tell me a little bit more about. Tell me, where do you see kind of Shaw Circle in 4 or 5 years? And is it sticking to this strategy? Or are you looking at expanding?
So this vehicle, yes. The exact strategy, if I'm running the exact strategy in 5 years, I've done myself and our investors a deep disservice, right?
Yep.
You better be adapting. And so I think there's always opportunity across new asset classes, across emerging asset classes, even, right? There's asset classes, a lot of the stuff in the tokenization world is immature right now, but sometimes immaturity leads to opportunity in
Yep.
some ways.
Yep.
There's certainly opportunity across the equity markets. There's certainly opportunities across commodity markets. And there's certainly opportunity elsewhere and new markets that haven't even been created yet, right? Like people are starting to talk about electrification as being one of the more base currents, right?
Yep.
Start talking
Yep.
about like what's the future, right? Like there's some really interesting changing dynamics that are happening in our markets.
Yep.
With the advent of tokenization, the Nasdaq's looking to go 24/7,
Yep.
365. All the markets are gonna trade around the clock. That's gonna bode must unless you're doing the follow the sun strategy, you have to be a firm that has global coverage in New York, in London, in Hong Kong, back in LA, back in New York, right? You have to be all around the world. And so, it's gonna lend itself more and more to algorithms, right? It's gonna be but algorithms shouldn't just be viewed as these blanket, like, question mark black boxes, right? Algorithms can also be written as a series of human behaviors that you would take that work, right? So as these algorithms compete, really what I think it's gonna be is, and you can already see it with what Robinhood's doing and a couple of these bigger players, like Ben's gonna have the way he thinks encoded into
Mm,
an algorithm, and it's gonna trade for him that
mm.
way,
Yep.
right?
Yep.
And so all of these traders the ideas are still human developed, but they're projected via algorithm, right? And we're gonna
Yep.
advance their markets are 24/7. There's gonna be opportunity 24/7, right? You essentially have to throw out some of your models in some
Yep.
ways when you fundamentally shift a market that way.
Yep.
We're also fundamentally shifting global economies right now, right? Like
Yep.
we're going through a period of the K-shaped economy where, there's never been a bigger divide between where the top and the bottom is. And that's going to
Mhm.
fundamentally change the way money flows.
Yep.
And
Well,
we need
you're touching on some interesting things as far as technologies, new markets. We started this off by talking about your background in quantum,
Yeah,
you know, quantum technology. I mean, there. How do I say it? Is your ability to be lean and mean and build from the ground up is gonna
yeah,
should bode well in any kind of as you evolve, whether how you trade options or as you expand into new market opportunities. Tell me
exactly.
a little bit about what you did in the past regarding quantum technology and how that could influence capital markets, investing, in finance in general and how it could influence the future of Shaw Circle.
Yeah. So quantum is really interesting, and I think it's a better topic that's said simply than complex.
Yep.
Ultimately, we're looking at in the near term is for quantum to be able to offer a quadratic speed up on certain problems that we want to simulate. And so what that really means, getting out of the big words that a lot of technology players use,
Yep.
and they only use them because they're so obsessed with what they do. And so my job ultimately to really understand them is to bring them into a better language to be able to translate. And so what I think quantum is going to allow us to do is solve more complex problems because you're allowed to add dimensionality to the problems and achieve the same speed and accuracy, right?
Yep.
And so when you get that quadratic speed up, you can add complexity to the problem if you need your solution in real time, right? And if you
Yep.
need your solution in later than real time, you can add even more complexity. And the two real challenges of this is both encoding that problem, right? What are all the pieces of information that you want encoded inside of that problem? And then number two, the logical qubit count, right? What is the max you're allowed to encode that will actually be accurate, right? We have a lot of correcting of the qubits to do right now to get proper cohesion. And
Tell the
so
audience what a qubit is.
the qubit, so you know how normal computer bits are zeros and ones, and everything is made up of zero and ones, even on this screen. Each pixel of your glasses right now is in a series of zero and ones that I get to see and are transmitted. Qubits are the bits that quantum computers use, and they are essentially, you can encode information to them in a way that they're anywhere dynamically between 0 and 1. And the outcome of that bit is not realized until observed. And so if
Yep.
you encode the problem inside of it,
Heisenberg uncertainty principle.
and then you observe, and then you see the outcome.
Yep.
So it's quite interesting,
And
and
it is
I'm not an
the
expert on it,
yep.
but
No, I'm not either. But it
that's
seems
the
to
nature.
me that from my brief understanding of it is that to make it applicable to the real world, it's a stabilization problem. And once they can stabilize the outcomes, which is interesting because by definition, it's uncertain.
Exactly.
Outcomes are uncertain. And so stabilizing the outcomes so that they can be reliably, independently, quantum chips can be reliably, independently used for repeated tasks the same way every single time. Kind of like what you hope out of AI, right?
Yeah. Yeah,
So,
yeah, you do. It's funny. It exactly that. Yeah, you want to be reliable, but you don't want to be the same thing every time. You don't want the same, like, part of the LLMs is they randomly select words along the way, right, to make
yeah,
it follow the paths.
yeah.
And so, anyway. But yeah,
But
no, I mean,
how
there's
soon do you think it'll be the point where a Shaw circle or available to the financial industry at large?
so I'm not a paid sponsor, but it's available today. Like Amazon through AWS Bracket, we have a great partner there. Through AWS, you can get access to IonQ hardware today via your existing AWS account. You can
Interesting.
run something in a queue on a quantum computer today. Ben,
Wow,
if we want to take the next 2 hours trying to code a problem and run something on quantum hardware, we could. Like, that's available to
interesting.
the public.
And it's
So
stabilized enough to actually do work.
just like quantum, right? It's bits are 0 and 1. Quantum collapses into that. There's so much depth between a yes and a no, right?
Got it.
There's so much uncertainty between a yes and a no, right? It's it's yes for some smaller problems. I would say the problem sizes right now can be solved if they're small problems, but we don't
Got
want to use quantum to solve small problems. We have classical technology and high compute technology that can
that could
solve
do
simple problems
small problems. Yep.
and even complex problems way, 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 way better,
Yep.
right?
At this
But
point.
there will reach a qubit count in which we are able to solve such complex problems that classical could never. And at that point's our Q day where we flip over our focus fully, right?
Interesting.
And now, so you can use it now. You're not gonna crack the secrets of the universe, right? But it's accessible to you, and the more people that get their hands around it earlier, the better we are, both as like a community, as a species, because there's more innovation that can happen, right? And so the more people decide to dabble and decide to learn, the more ready they'll be when it comes. And I think quantum's going to unlock a series of things in tandem with AI that make our lives exponentially better from a resources perspective, from an energy perspective, from a longevity and healthcare perspective. I'm very bullish about the future. I know that there's a little bit of negativity that goes around sometimes of AI is going to eat our lunch, but I think it'll only eat our lunch if we don't keep raising higher and higher and more challenging problems to be solved.
I
If
think
we
there's a lot of doom and gloom out there in the world, but what I don't
Yeah,
think what people don't realize is that you look at the there's like from the let's look at the business, the idea you're going to lose jobs, blah blah blah, right? What I don't think people realize is that there's cutting costs is one aspect of in business. There's costs and there's revenues, right?
yeah,
Cutting costs is one aspect, but AI and everything that's going to be happening, it's going to grow the ability to produce.
yeah,
The opportunity set is so much more on the
yes,
is amplify production so much more that it will lead to hiring up. It's going to lead to
exactly.
more jobs. And in the financial industry, it's going to lead to more opportunities to recognize more opportunities to generate alpha, right?
Exactly.
And in ways like in pockets and cracks that no one had thought existed.
Yeah,
And kind of turning this back to you and Jordan, right? You guys earned that $15 million quantum fellow grant from South Carolina. Tell us why were you chosen, and how does those qualities for which you were chosen for reflect itself in the DNA of.
at the core of it, right? Like if we strip down all the layers, the core of it, Jordan and I and our team are willing to solve really hard problems, are willing to go through potentially the more difficult route to get there. And I think that the people that knew us, that we had pitched, that had been with us from day one, knew that we were willing to do the legwork required to make something difficult possible. And so when you look at a new emerging technology like quantum, you look at a group that's going to have a series of grit and intelligence that need to combine really well to achieve an interesting outcome. And so that and also that's just about us, but there were a ton of people doing the work ahead of us to position that grant, to position that organization, to position that value proposition, right? Like we didn't go out and achieve it ourselves, right? A group called SC Quantum went out and did the legwork and found the innovation topics. They just happened to bump into us, and we were lucky enough to bump into them. That those two
Mhm.
missions sort of combined in a nice spot. And so it was the legwork of everybody else. We accidentally got tapped to be a part of the greater mission, and we're very grateful for that.
Fantastic, fantastic. That's amazing. Last question. There's one thing you want the world know about Jaw Circle. What is it? And then how they get in contact with you.
Big question, Ben.
I know.
What is one thing that I want the world to know about Shaw Circle? It's a really good question. I think that one thing I want the world and our audience to know about Shaw Circle is that we fundamentally want to build this investment firm a different way. I think that there has been a lot of hidden, siloed ideas that have not led to sort of the flourishing of partnerships between investors, managers, innovators. I think that I want people to know that we want to fundamentally rework how we think about investing. We want to be a little bit more clear, a little more open, a little bit more collaborative. We want to bring people into the fold. We don't want to make people feel like they couldn't do it. We want them to know how. We want to maintain a little bit of that information, right? But we want to be on the execution, the innovation, not on
Hmm.
the fact that I know something you don't, and I'll never tell you, so you have to pay me, right? We don't
Hmm.
want that to be the status quo anymore. So I think there's a positivity and a collaboration lens that we truly want to bring to to the world.
Yep. Well, that's important, right? In a dynamic world with so much information hitting us, so many different problems that have to be solved, no one's going to solve it alone. And the same is true in investing. And a collaboration with your clients, your partners, and just the contemporaries in the world is going to make you It's going to make you better. So, how do they get in contact? How does the world get in contact with you? What's the website? Is
Yeah,
you know?
we've got a website. It's shawcircle.com. We've got a general outreach email, relations at shawcircle.com. Anybody who sort of resonates with the general line of what we're doing of bringing innovation to financial markets and working with good people, we love to work with good people. So love to speak to everybody interested.
Fantastic. Well, we loved having you. I'm absolutely fascinated by what you're doing, and I'm really excited about the journey ahead for you and Jordan and your whole firm. I'm sure we're going to be hearing great things about you, and in years to come. I'm going to remember I once had a podcast with Carter Burns, who runs one of the biggest hedge funds in the world,
Yeah,
asset
man,
management firms in the world.
for you, I appreciate you having me on so much today. We'll have to do this again and also in person sometime, maybe. That'd be fantastic if you're ever in Charleston.
Well, we're honored. So everybody, for the viewers, we hope you check out Shaw Circle. Thank you for joining us for the 4th episode of the Scaling Alpha podcast, and hope to see you on our next podcast. Thank you, everybody.